Good afternoon, everybody. Welcome to the Zaner Ag Hedge World Agricultural Supply and Demand Estimates for February 18th, 2023. Remember, trading futures involves risk and is not suitable for all investors. And everything we talk about here today is just our own opinion and not direct trade recommendations. But with all of that being said, we have come together here today to bring to you the Zaner Ag Hedge team, who is comprised of myself, Dan Hussey, gentlemen, Ted Seifried, Joe Nacrudo, and Alex Kurek. We're here to assist all of our clients in some of the navigation of the markets and to bring to you today, right, a little bit about a recap of what has gone on in the last, market or today for the WASDE, right?
Right.
A little bit about us, though, before we get into it. We were founded in 1980. We are an NFA CFTC registered broker. We're here to assist our clients with risk management and ultimately provide excellence in clearing and brokerage services. So we use a lot of strategies, and we'll talk about futures and potentially futures and options at times. We try to bring a well-rounded approach to risk management to help, really, I think, take a balance sheet-like approach to even managing risk for, the farm as well. But all that aside, we're here to talk about the WASDE today. So if we want to take it away, Alex, why don't you run us through here our soybean, corn, wheat ending stocks for the U.S. production numbers.
Okay, so soybeans came up a little bit higher to 225 million bushels. Corn came in at 1.267 billion bushels, and then wheat at 568 million bushels. That was slightly above the average analyst trade estimate. So that did come in a little bit higher.
Which one?
All of them. 576 for wheat. We came in at wheat did come in a little bit lower. 568 for wheat, and then 1.266 was the average estimate for corn, and we came in at 1.267 billion bushels. Soybeans, of course, 211 million bushels was the average trade estimate, and we came in at 225. There it is.
Some things to note here in our numbers today, right? I think the Argentinian, we'll look at those South American numbers in a second, but on the U.S. balance sheet, rather, right? I think there's growing concern right now about a little bit of a larger ending stock due to that loss of ethanol usage in corn right now, and certainly, today's rally in energy markets, I think, might help, bring that number back to where we might want to see it, but I think there's been generally a downtrend in energy right now that's also weighing on that. Ted, I know you've been concerned about, the rallies that we've seen in corn and beans seem to be beaten down. What are your thoughts in terms of U.S. production right now?
Well, as far as that cut in ethanol demand by 25 million bushels, I mean, gasoline demand is down 7.7% year over year. So that's the culprit there. It's not necessarily the price of ethanol or the price of corn stocks going in to make ethanol. It's just we're not driving as much as we had been. I think there's a sort of new world where there's a lot of working from home or working remotely. Not everybody's driving into the office like they used to be. Maybe that changes, maybe it doesn't. I don't know. But for the moment, I think the USDA was right to lower that ethanol figure by 25 million bushels. The one that I think really kind of surprised was that they didn't touch exports for either corn or for soybeans. I think a lot of analysts would have had them lower their corn export number and possibly raise the soybean export number. So those didn't happen. I think the USDA is kind of punting for another month to see what happens as far as our export sales and shipments are what happens with those. But I'll tell you what, if we don't really pick up the pace in corn sales and shipments, you're very likely going to see a pretty sizable reduction coming next month for that corn export number. And I don't see any other categories where I think demand has to increase. Feed or residual, to me, seems about right, maybe slightly on the higher end. We know that we have less animals out there. The ethanol reduction that we saw today, as I said, I think makes sense to me. So I could ultimately see this corn carryover creeping up closer to 1.4 billion bushel. And to me, that doesn't really justify the prices that we're trading at. The big risk that we have in corn right now is that second season corn crop. If there was a problem with that, that can really change that export picture. Again, probably why the USDA waited, but a month from now, if that second season corn crop gets planted and is experiencing halfway decent weather conditions, again, I'd see bigger changes coming on this balance sheet further on down the line. Soybeans, which were, that report was a little bearish because they lowered the crush but didn't touch exports. You had that knee-jerk reaction lower, but didn't sustain that, mainly for the opposite reason of what we were talking about in corn, is that most of the trade feels like the USDA should be raising soybean exports, and at some point will take us down below a 200 million bushel carryover. Again, that remains to be seen. I think the shipments number is the key thing to be watching there. I would not be surprised to see cancellations as Brazil harvests their first season soybean crop, but we'll have to see. And again, I think the USDA decided to punt until next month. Aside from that, pretty lackluster report. Some of the global numbers came in a little bit bullish. Big reductions in South America, as you guys are going to talk about. Unfortunately, I have to run to go jump on a panel. So that's really my 2 cents on the report. The strength in wheat today, I think, was what dominated the trade because we had sort of lackluster reports. Wheat pulled corn up, which kind of stabilized soybeans and really gave the bulls a chance to say, oh boy, that export number is going to go higher and the carryover is going to go lower. But we'll see what tomorrow brings. If wheat can't hold on to that strength, you might have the row crops trying to, see what's to the downside. So we shall see.
And thank you, Ted, for joining us. Good luck with your the rest of your day. I know you've got a big slotted schedule for yourself there. And that was an excellent leeway right into the discussion there for that South American reduction being kind of one of the talks of this trade, right? And we're going to continue to look for that and into the rest of this year to see how that might change, right? World ending stocks for soybeans, average analyst guesses here came in at 102 million metric tons, compared with January ending stocks at 103.52. Zaner's own guess was at 101.1 million metric tons, and the actual came in right there along the lines at 102.03 with trade expectations. So we were again looking for, as Ted put it there, that reduction in the in the ending stocks number along with most of the trade. But it wasn't as deep as we thought it might have cut. And that could be a reason, right? We visited those lows initially and then have come back up. Corn ending stocks on the world scale, 294 million metric tons. Again, a little bit lower than the average trade there than where it came in at 295.28. And still a reduction against January ending stocks there at 296.42. Wheat ending stocks was a very marginal difference there of about 0.8 million metric tons between average trade estimates and the actual number, which was only about a point difference of 1 million metric tons from January's ending stocks at 269.34 for the world ending stocks on wheat. Again, world ending stocks came down there, generally speaking, or certainly below the trade expectations for the USDA because of that Argentinian crop, and some concerns over Russian and Australian wheat crops have been raised. With China imports of corn and soybeans unchanged, have left us a little bit untempered in the U.S. market. Again, those South American numbers here, Alex, if you want to run us through them and tell us what we saw today from the WASDE report.
Yeah, a few things. So we came in actually under the average analyst estimate on Argentinian corn and soybeans, as you can see here, 48.5 million tons for corn, 42.34 for soybeans. And the actual was, as far as soybeans go in Argentina, came in nicely lower. a whole, 1.25 million almost million tons lower. With Brazil, get back to it. Yeah, so we did see that come in a little bit under 2. A marginal difference, but it did come in lower from what people were expecting. And I think we saw, not to get too ahead of ourselves, but the market did close higher, I believe, slightly. So I think we are responding to that. And then, of course, we did want to make some notes here at the bottom. We're only 9% complete versus 16% last year as far as harvest goes in Brazil. And I think that's kind of, what we're seeing in the markets.
Yeah, absolutely. And again, we've seen some heavier rains here late in the season. A big reason, right? Harvest is behind, and that wall of grain is still a concern. And very likely, in my opinion, I agree with you, is the reason we haven't blown through the highs. And as Ted alluded to earlier, but it was a green close, across the board for wheat, corn, and beans today. And as we mentioned there, dry December conditions were the issue in Argentina. Rain didn't come when it was necessary, and now it seems like they're getting too much rain, late when it is just affecting a harvest time frame. But you can see the total precipitation there through December was well behind in terms of percent of normal for, it seems like all the way from Paraguay south through half the country of Argentina there. And highlights from today's report: Argentinian corn and soybean production were lower due to drought conditions. Chinese cotton production has been raised, and updating ginning and classing data. So, maybe a little bearish there for our cotton report as well. And no U.S. crop production changes except for sugar. So, it's really really been a very, a report, right, that I think has been tough for us to sink our teeth into and walk away with a great fundamental understanding of what's going on. However, there were, right, some technical bearings that we should consider today. Corn had an outside day, closed in a green day there. So look for confirmation of higher price action into tomorrow for potential, type of, well, at least move higher, right, technically speaking. And soybeans settled, just above that 18-day moving average, which from a day, on a daily chart perspective is generally what we look for, in a bullish trend to continue. Over here at Zaner, though, we do provide risk management solutions, and it's not a one-size-fits-all type of strategy. We work with our clients, and depending on what your type of risk management needs are, whether it's from a speculation standpoint or from a production standpoint, we're here and at the ready to discuss those with you. We consider ourselves a bit of an educating broker, and we are a contributor, across the media space. And you've probably seen some of our own Ted, for example, doing RTD-TV, and today needing to leave for a mic check for his next event. You can contact us over here at Zaner at 312-277-0110 or 0050. And follow us on Twitter there. You can find us at Ted Spread.
Real quick too, Dan.
Tony Crudo, Daniel Hussey Jr., and Alex Kurek on
you guys, everyone listening to, you're more than welcome to ask any questions as we go through. I mean, I know we're kind of, there wasn't a whole lot to talk about to begin with. I mean, but any questions, shoot them into the chat. We'll answer them as we go as well. Do you guys want to talk about the technical picture at all today? What we saw as far as the charts go? I know you guys were talking about that a little bit earlier. We still have a few minutes here.
Okay, good. Yep. There we go. So let's work through real quick that corn daily chart that I had mentioned. A couple key technicals to walk away from, not just today's price action, but the price action of the last several weeks. We have a downward sloping trend line against the highs, pretty widely talked about level from a lot of analysts that we've seen too. And we seem to be breaking or trying to break above that level and now stay above that level as broken resistance now is support. Today's price action was interesting, though, that we actually had, a higher highs and lower lows, considered an outside day. But this came after 3 days worth of inside price action, breaking back above and closing above that 18-day moving average with some momentum higher tomorrow. That could be one of those technical reversals that sparks interest from funds and could be, a little bit of a fuel for a move back towards the recent highs around 690 in December or March corn. There's certainly, a narrative to discuss of how we get back to, open gaps, one that we have up at like 7:30 and back to the highs here of late October there around 7:15. But in the very, very near term, at least in the 20-cent range we've been trading in, seems like we are now trying to, enter in a period of price discovery higher, and resistance is probably in that 860 or 686 to 690 area above. 18-day moving average, as I mentioned, is broke above here today at 678. The 200-day is at 674. 100-day just below that at 674. Okay, 674 and a half on the 200-day, 674 even on the 100-day, and the 55-day down at 665. We're starting to see those bullish crossovers and those moving averages as well, helping build the bullish case.
Well said.
All right. So daily beans in the March front month future, not an outside day in terms of a higher high and a higher or lower low. It was a lower low and a lower high for all intents and purposes with a green close, possibly a signal of some capitulation. We say that because the 610 or 1510 area, the multi-day low and the lows of the month, we broke through that and closed well above and actually right above the 18-day moving average as well at 1519 3/4. The 18-day there at 1519. Technically a decent close, but again, another setup that or type of daily close that we want to see another day's worth of price action to help maybe confirm that a low was maybe set in place. 100-day moving average is still well below us, down at 1460. The 200-day at 1454, but last week we did have that 100-day cross back above the 200-day, giving us a golden cross here on the chart. The 55-day at 1489 is aligning with our prior supportive areas from earlier in January at 1478, and we are coming off of an almost oversold daily RSI, suggesting there's still some room to the upside if this market wants it, or room to go below today's low, at least in terms of our momentum indicators here. But showing a little divergence off the low, there's a supportive area around 1,500 that is holding until it doesn't, right? And with all that being said, wheat closing up 15 cents in the Chicago contract today, taking out almost 2 days worth of highs and certainly breaking above our downward sloping trend lines like corn and trying to stay above them. We've been holding the 18-day moving average as support here for Chicago wheat for the last several weeks. And it seems to be a fight between the 55-day and the 18-day moving average since the start of February, with today's close being the first day we have closed above the 55-day moving average since November, when we fell below it there at 873. Today is the first close back above. So again, wheat and corn giving us some interesting, maybe bullish technical reactions here. Soybeans, certainly with the work it did off of its lows, it begs the question, does it want to go higher? And we'll have to figure that out as price action develops. So
that technical strength, can you hear me, Dan? Can you hear me through your?
Yes.
Can you hear me through that technical strength? I think is more than a moral victory here today. I mean, we could be 10 or 15 lower in all three commodities, but we're not. And so it may be that the questions that we've answered today, the market is telling you that there are still further questions to be answered. In the case of wheat, big short position, you're not surprised to see maybe some of those shorts moving to the sidelines. Corn and beans, no short position there by the funds, certainly decent sized technical positions by those technical traders. But now you've got still unanswered questions. Ted alluded to the safrinha crop. Every day that we delay, what impact does that have? And ultimately, what does that mean for available supplies? Argentina, the numbers that we came out with today, I'm sure the trade recognizes that that is a step, yet another step in the right direction by the USDA, but how low can we go on those numbers? And what is the impact? How does that wash Argentina versus Brazil You look at your other big exporter, Ukraine, how things are coming along there. Certainly that can be debatable, in terms of what is exported versus, or what is loaded versus what actually makes its way to to its destination rather. So I think the market is telling you here today technically that there are some unanswered questions and they're very important, and we won't be able to stop watching just yet, right?
Yeah, absolutely. Right. It's a market that has been trading, coiling up in a sideways consolidated range. We've got some news that got us out of, maybe has now gotten out of the way. We certainly have quarterly grain stocks coming up in our next, news cycle. Another WASDE report. We're going to be honing in on the planted acreage now. But the USDA is starting to tell us a little bit more about some of the things we've been questioning in South America, and solidifying a lot of that. So, well, that about does it for, I think, everything I had to say on the markets. It doesn't look like we have any questions from the participants, but we're always out there on social media. And certainly you can always give us a call here at 312-277-0050 to get in touch with any of us over here at the Zaner team. You guys have anything else?
No, I think that wraps it up.
Well, thank you for joining us, everybody. We will be back with you for our next WASDE update, of course. And you can, of course, check all of our social media followings to follow us in more detail and some of the more daily updates and other things we'd love to talk about. With that being said, have a great day, everybody. Thanks for joining us. And we will be back with you with the next WASDE report and as price action develops.